Good afternoon. Welcome to Options Center. It is Saturday, 9/17/22. You guys, I already did this video, but I had the wrong screen displayed the whole time. So here we go again, take two. What we're going to do is our usual weekend update. We're going to go ES on multiple time frames, and then, I might throw in a bonus here or there of some of the individual stocks. We'll see how long this takes. But if you're new here, go down to that bottom right hand corner, hit that Options Center logo, and subscribe. And you guys, I have to say, I know this is redundant on every single YouTube, but you got to hit that like button. It helps us out, helps get the algorithms moving and get these videos out to other traders. So we want to help people stay bearish in a bearish market. And I mean that on the long term right now, not on individual bounces, bullish, bearish, bullish, bearish. We're in a bear market. The trend is down. You gotta look that direction and we scalp to the upside. Okay. We have ES on the monthly time frame. We're looking at after this channel, we hit the top of the channel after a 1, 2, 3, 4, 5 wave move, and we're looking for at least our first target, a minimum of 3,500. You say, oh my gosh, we still have 4 more 100 points. Well, I think that's the minimum. I do ultimately think we're going to head down to this 2,200 area, but we got to play this day by day, week by week, month by month, and make our decisions there. I do have an Elliott wave count that shows each and every day and also on the weekend of where we're heading. We haven't had to change that count very much at all lately. So if you want that, it's on our Patreon. It's $5 a month to get that, and there's other tiers as well. So here we go. ES on the monthly, we have let's dig in here to see the candle. We talk about on this channel the 8 EMA. It's very important to us. That's our trend indicator for price. So price is the arbiter, and we see that price keeps popping up to that 8 EMA and breaking down from it. So the trend continues to be down. We labeled this a long time ago, a few months ago. This consolidation area broke down from it, back tested it, broke down, and then back tested again, and then tried to test it and tried to get over it, but couldn't close. So that was our monthly reversal candle last month, and now we're looking at some follow through where it broke down from that candle bottom. So that says a lot. It says we are in a bearish condition. We have continuation. We'll see where this candle closes. It's very important for the candle to be a close. It's giving us hints right now, but we thought this was bullish at first. It was way over the 20, and it ended up being down at 39.50 area. So on the monthly time frame, we continue to head down. Once we break these lows, if we break these lows, then we have a confirmation for the kiss of death, and to me, I think we're gonna start heading down a little bit more accelerated. All right, the MACD is heading down. It's declining. The RSI declining. It's on a trend down. Everything points bearish, you guys. We have the weekly time frame. The weekly time frame didn't match everything else. It kind of gave us a little bit of hope. We popped up on the RSI and got to that 50 area and are breaking down from there. We had a trend up, and now we broke that trend to the downside again. So it has a lower high, and also in this MACD, you see the bull cross, but now we're trying to cross bearish at this point. So after this after this rising wedge breakdown, all we've had was lower lows and lower highs and lower lows. And this was a series. You can see the sequence kind of just goes in a row there. That sequence is broken to the upside. And we had our larger consolidation or pullback. And so this now tells me that we're in our next sequence to the downside. So I think we've just begun on this. I think we had our first wave and then a pullback, and now we're in a more impulsive third wave where we should get some reaction here on the on this support or confluence of the 200-week moving average, and also the support. I do have this would be a mid channel range here, so that doesn't have too much weight to me, but it does just happen to be in this consolidation area, this confluential area. And then after we have some sort of pullback or sideways pullback, or, and we start to break this area, then I think the next target is really 3,200. So I'm really looking at 3,500 and 3,200 being the targets below. At that point, before some other significant sort of bounce, which could be a wave four, so it could be a very large sideways movement for some time too. With price accelerating to the downside, anything can happen. I just don't trust many bounces, okay? Now, getting a little bit further here, I've had this 3,900 area here for weeks, a few months, as a matter of fact, when we started testing it. We broke up from it, broke down through it, tested it, finally broke back over it, and now we're testing it again. I do think that we break down from this point. Once we get underneath this area and close underneath weekly, daily, even hourly below this point, then I do believe that we're headed down to the next target, which would be that 3,500 area. Maybe not quite straight down, but it should be pretty accelerated, similar to this wave three here. Now I have this Elliott wave jargon that I'm talking. If you are, I think I already mentioned it, but on the Patreon, that's where I'll label all of that Elliott wave counts that I have, and they're all bearish right now. Okay, moving to the daily. Daily trend is our friend. Okay, daily, super important to me. We have this lower highs and lower lows that are happening. We have this massive run for a correction to the upside, and all it did was hit our downtrend line here. Now, I was wrong through a lot of this move here, you guys. That was a massive move. I've never thought it would have made it that far up. Same thing with this one. It moved a lot more than you think. Price can go on these bear market bounces a lot higher than you think. So don't fight the trend, but know that it's going to continue to the downside for now. So with this massive move to the upside, it created a trend line. Came back to that trend line, and that's where we had our next bounce. Well, we broke down. That's a significant breakdown, you guys. I know that price didn't move very far, but it was quad, whatever you call it, expiration, quad witching expiration. And that kind of distorted what happened. We had a breakdown, and we came down to about that 38.50 area and bounced back. But this bounce that we're having here, I don't think it's going to get very far. If it stops right here, this is a significant area. If it does get past this area, I do believe it's going to just back test the triangle before breaking back down. So I don't trust this bounce very high. The 8 EMAs with that triangle, I'm not sure it even makes it that far. That appears to be around the 39.50 area. We'll look on the lower time frame. But you see the trend is still down on the MACD, and we're breaking back down on the RSI. So losing strength there. On the 65-minute, let's just see if we can find out any more information. And we have that triangle here. Same thing. Broke down. It was a fake break, so we had a massive move to the upside. I tried to count through here, and it just ripped. It just kept going, grinding higher. So I fought it for a little bit, then let go, and then we saw it come back to the 68.2 retracement and just ripped to the downside. So we had a very good play there. So this impulsive move, I do believe that this wave two was over, and that this is not the same move. And so I do believe that we have a 1-2, and then I saw that somebody had a wave four going on here. Possible. It did exceed the 382 back test here, but I think this might be a 1-2 setup, because our wave three should end pretty significantly lower. to that, this wave three in particular, probably to that 3600, 3660 area. It should just keep knifing through all this, and then we should start getting some bounces before headed lower, and then bounce and then lower, where it should get a little bit uglier down here. But this portion here should be pretty clean, where the bounces are minimal. All right, so on the MACD, you saw the positive divergence. We're getting that divergence playing through. We did a little scalp on Friday to the upside, but we kept all of our swings on to the downside. And you saw it break down from the positive divergence, broke through that, and looks like we're coming into resistance again. So I don't suppose this bounce should be much higher, you guys. Here's a closer look. Let me make that a little bit more clear. Okay, so we bounced, broke that wedge. We have a little bit of a gap here. If we close that gap, we could continue to the downside from there. If we break above here and start making support out of it, consolidating, then I do believe we could backtest the triangle. But that's around the 39, 46, 47 area. I don't see it happening where we maybe we pierce and break down, but that's to hit the stops here at the 39.53 level. But that's about it. That's all I see happening at maximum, and then we should start breaking lower from there. And this next move should be pretty fast. We're through expirations. We have the FOMC on Wednesday, I believe. So that could accelerate. We have lots of catalysts, and just be careful because this market is so sensitive to economic data in the Fed. And anytime those are on, it doesn't change the charts to me, but it accelerates those moves. So just be careful when you're out there. Yeah. Don't forget to hit the notification button so you can receive these videos every time I put them out. And I hope this information helps. So hit that like button if it does, and we'll talk to you soon. Thanks for joining us here at Options Center.